Hello and welcome to Access Ann Arbor. I'm your host, Melissa Cohn. Access Ann Arbor provides the opportunity to educate its viewers on a variety of topics. Today we're going to focus on a few of the Michigan State Development Authority programs, specifically the Down Payment Assistance Program, Foreclosure Prevention, and the Federal Tax Credit Program. Joining me today, I have three industry professionals. First, Mr. Eric Dusenberry from the Michigan State Housing Development Authority, also known as MSHDA, Wes McCaig, who is the owner and broker of Visible Homes Real Estate Brokerage, and Donna Ferguson, who is a loan officer with Amira Mortgage. Welcome everyone to the show.
Hello. Thank you.
We've got a lot to cover, so let's get right into it. Eric, we will begin with you.
Great.
We're going to talk about MSHDA, a very important organization here in the state of Michigan. So why don't you tell us just real briefly
Sure.
what you do?
Right. The Homeownership Division, and that's the division I work for, is basically responsible for putting affordable lending products out on the market through our participating lenders that we have throughout the state. We also oversee a counseling network of counselors throughout the state that allow Michigan residents to go in for different types of counseling. So these counselors are located throughout the state, just as our lenders are, and they're available to Michigan residents who might be qualifying for a MSHDA mortgage or in need of foreclosure prevention counseling and the other counseling services that the counselors have.
Okay, so and there are a variety, like we had mentioned, there's a variety of programs.
Right. The programs that are out there, the main one is down payment assistance.
The down payment, okay.
Right. Down payment assistance program is basically set up for people who have limited cash assets.
Okay.
So if they don't have a lot of assets available to them, we do have down payment assistance that's available for purchases on homes. It's up to $7,500. And there's no payments that's due on the down payment assistance, and there's no interest that accrues on it. And it's available to help with the down payment, the closing costs, and the prepaids, which are the taxes and insurance that are typically due at closing on a loan.
Okay.
And that's pretty much how down payment assistance works. It's typically on an FHA mortgage.
Okay.
It can go on a rural development loan or an RD loan as well.
Okay.
Yeah.
Kind of shifting gears then, I'm a potential home buyer. I guess, Wes, you could probably answer this. Being the real estate agent, how do you inform or educate a potential buyer?
Well, the nice thing about the program is it will give a buyer more options. So for example, you could have a buyer who's pre-approved for $150,000.
Okay.
They may have a few grand in the bank. So they typically will look at $80,000 houses because that's what they have a down payment for.
Right.
Well, with this program, now they can utilize their full pre-approval because they only need 1% into the transaction, which would be $1,500. So they would have that money. So now they can look at homes between $80,000 to $150,000. So it gives them a lot more options.
Okay. Do you, is this a more of something that's not as well known, this program? Or is that what we're trying to?
Exactly, because as Eric mentioned, there's a list of approved lenders who can offer it.
Okay.
So sometimes when a client or potential home buyer is talking to their loan officer, that loan officer may not be approved by the state to offer the program, so they may not be informed of it. So.
Okay. Well, then I guess I'm going to go back, Eric. Well, how can they then take advantage of this?
Well, we do have and maintain on our website a list of approved lenders. So MSHDA, Michigan State Housing Development Authority, will go out and meet with lenders, get them signed up, train them on our program offerings.
Okay.
So that when people come in and apply for a mortgage, loan officers and experienced lenders, they will go out and they'll look at the loan application itself, make determinations of whether or not the people have enough cash to close. So, in the normal process of things, and Donna will probably get to some of that later on, when they look at an application, if they're limited with the cash to close, the natural course of action would be look at the down payment assistance program. So really they start with, going to our website, looking for approved lenders. If they go to our website and look at our lenders list, there's an experienced lenders list with loan officers that do quite a few MSHDA loans. So they're posted there for them to see.
Okay, so then okay, so then a potential buyer can, so if they don't have someone to use, is that how that works?
That's what it's there for, yeah. We have on our website a list of participating approved lenders, and they can be really big organizations, you know, some of the national organizations, they're all signed up. Well, only maybe a few of their loan officers do those types of loans. So we also layer kind of on top of that experienced lenders that are lenders that do quite a few MSHDAs. Their experience level is a lot higher.
Okay.
And one thing I want to jump in for a sec.
Sure.
When you had mentioned cash to close, in some instances, you'll have a buyer who may have a little bit of money for their down payment, but they don't have the money for their closing costs, which still affects the cash that they need for closing.
Right.
What happens typically in a situation like that is they would ask for the seller to contribute towards their closing costs. But the problem with that is that a lot of sales out there, homes for sale, it's limited. So a short sale, we've seen short sales where they limit the seller credit to 1% or 3%. We've seen other ones where they don't even offer it at all. So with the MSHDA, you can also use the money for closing costs. And again, as I had mentioned earlier with the options,
Right.
again, that's another example how it offers the home buyer more options.
Okay. Is that do you see that primarily with homes that are short sale? I mean,
Yeah, absolutely. The majority of short sales cap the seller credit at 3%.
okay.
And if the short sale is an FHA short sale, meaning that the seller's mortgage is an FHA mortgage, that's usually capped at 1%.
Okay.
So the buyer needs to not only have their down payment, but they need to have their closing costs as well. And that's tough. That's tough for
Sure.
a lot of
Oh,
people,
yeah.
so that's where this
Sure.
program is fantastic.
Yeah, and I could give you maybe a brief example of that. If someone's looking to buy, you know, a $100,000 house, if down payment assistance is $7,500 and it's limited at that, it can take care of the 3.5% down payment
Okay.
that would be required for that purchase, which is $3,500. The closing costs could be up to $2,000, and prepaids can be how much, Donna?
Oh, they could vary depending on what the taxes are
You know,
for the home that they choose.
that
Okay.
down payment assistance can take care of the closing cost, prepaids, which are the taxes and insurance, and the down payment. So they can move in for 1% of the purchase price, which would be $1,000, which would be a lot different than a standard FHA deal where they're looking to put, you know, in excess of 5 or 6% into the purchase price.
Okay.
Yeah.
And one other thing it does too is it makes the offer stronger, because one of the things we
Sure.
see a lot of, and sometimes you see this with foreclosures, is that they'll actually list the home a little bit below market value, and it creates a little bit of a bidding war on the house. Well, the people who are asking for seller credits on top of their offer are a little bit at a disadvantage. So again, it puts them in a better position by using this program.
Putting the program. Okay.
Yeah, when you don't have to ask for the seller credit,
Right.
it's to your advantage.
Okay. Donna, let's kind of turn over to you. Tell us about what's your perspective, your experience with this program as a loan officer.
Oh, I think it's a great program. It's especially now in the market that we're in. It is typically a first-time homebuyer market. And that's what you'll find. A lot of first-time homebuyers don't have the cash
Sure.
needed
Right.
to purchase a home, and this just helps them greatly, you know, to be able to get up to $7,500 and only have to have 1%. So it's really been a great program. I mean, I've had a lot of success with it, and I'm doing very well with it. So
Good. Okay. How do home buyers, first-time home buyers, usually hear about this program? Is it through the realtor? Is it through online searching? How would they hear about it if it's not on this? If they haven't heard about it?
I think
from
a
the
lot
show?
of it is referrals from people who
Referrals.
have done the program. A lot of them do look up on the MSHDA website. They're just looking for first-time home buyer, and it pops up. Or they'll look, if they're searching for homes, they'll find websites. Your website has a MSHDA link to it.
Link. Okay. So.
Or is-
Yeah, and especially in today's world where everyone Googles everything,
Right.
it's or, internet searches.
It's easy to.
Yeah,
stumble.
they're definitely doing more research than ever online, for sure. And
Okay.
so that's one way they can find out about it.
Something else I was going to ask was about the requirements, the property requirements. Is that as in location, the size of the home, the lot? What are some of the requirements?
The property requirements typically for MSHDA loans, they're not really any different than your other agencies like Fannie Mae, Freddie Mac, or FHA.
Okay.
We're looking typically for primary residences. So no investor
okay.
homes, typically single-family detached condominiums if they're approved by the agencies, again, which are Fannie Mae, Freddie Mac, and FHA. And then manufactured housing if it's multiple sections, those can work.
Okay.
Some of the overlayments on that are more related to the borrower's qualifications, and some of those we can get to real quickly. Possibly, you know, the income limitations MSHDA has. You know, it's typically for low to moderate income, but that income really, when people think of low to moderate income, it really ranges from about $62,000 to over $100,000.
Okay.
So it covers a lot of room of where the incomes fall.
Okay.
Yeah.
Wes, real quick, can you explain the home buying process?
Yeah.
Just real briefly.
Yeah. Well, typically what the first thing a buyer would do is talk to a loan officer.
Okay.
Because they want to know,
What they
how much,
can-
what their buying power is. But they
Right.
also want to know what a payment that they would feel comfortable with. So that's usually the first step. And then after that, they have their criteria. They start looking at homes that meet that criteria. And once an offer is accepted, basically most buyers, it's not required, but most buyers will get a home inspection. And that's where an inspector will come in, inspect the roof, furnace, the meats and potatoes of the house.
Right.
Well, from that point on, once the inspection's good and they want to move forward with the deal, really the majority of the process is just working with their lender on getting the mortgage fully approved and getting it ready for closing.
Okay.
Really, the only other thing we would do with the buyer at that point is do a final walkthrough
Okay.
before closing to make sure the home's still in the same condition as when they saw it last.
Okay. So I'm a potential first-time home buyer. What would be the first step? I most likely am I'm already going to be searching the internet. I'm already probably going to be looking at houses and what I like. What would be the next step for me?
I think getting your first is to find a lender and get your pre-approval because
Before I even...
right, because your offer in most cases they will not even be accepted unless you have a pre-approval from a lender.
That's correct, yeah.
Okay.
Most agents won't even present the offer to their seller
Okay.
without a pre-approval accompanied with the offer.
Okay. Eric, what about I guess I want to ask about the interest rates.
Well, our rates typically at MSHDA, we sell bonds to finance our mortgage operations. We only do that once or twice a year. So our rates don't move up and down like bank rates do.
Okay.
Our rates right now are 4.25% on a 30-year fixed without a down payment assistance loan, and that's well below market value. Our market rates for a 30-year fixed with down payment assistance, it's at 4 5/8. So the rates on our mortgages right now are very good.
Okay. Okay. Well, I think we're going to take a short break, and then when we come back, we're going to shift gears, and we've got a whole other programs to focus on. Okay, don't go anywhere. We will be right back. Hello and welcome back to the second half of Access Ann Arbor. I'm your host, Melissa Cohn. We're going to kind of switch gears now a little bit and talk about homeowners and some of the options that they have. Wes, we'll begin with you. As far as existing homeowners, what are some of the options for those who may have, trouble with their mortgage at this right now?
Well, there's several options out there today. There's options for people who want to sell their home, and typically the most popular option for that is the short sale. And that's where the lender will allow them to sell the home for less than what they owe on it
Okay.
and relieve them of any losses.
Okay.
The other thing is there's options for people who want to stay in their home as far as loan modifications.
Sure.
And that's where the current lender may adjust terms, help them with the better payment. Then there's also government assistance programs,
Okay.
which I think Eric probably has a little bit of information on that.
Okay. There's a couple of programs we want to talk about
Right.
today.
Yeah.
What's the first one?
Well, in February of 2010, President Obama set up a hardest hit fund. So for the states that were being really hardest hit by the housing crisis, monies were set aside for them to get programs put together to help people stay in their homes, in essence. To date, we've gotten just under $500 million at the state level to put programs together. We have 3 programs right now. One is called the Unemployment Subsidy Program.
Okay.
The second one is called a Loan Rescue Program, and the third is a Principal Curtailment Program. So with the Unemployment Subsidy Program, the way that works is if an individual is unemployed or a family member is unemployed in the house that's on the note or mortgage,
Okay.
MSHDA will give up to $3,000 to bring a delinquent account current, and then we'll actually subsidize the mortgage payment for up to $750 per month for up to a year. And on the Loan Rescue Program, that program is set up so that people who have had a one-time setback like unemployment
Okay.
or medical issues or something that's put them behind on their mortgage,
Okay.
we can give them up to $5,000 to bring that account current if they've made it over that one-time occurrence. They're back to work or whatever.
Okay.
Okay. The third program, real briefly, is a little bit more dealing with loan modifications. The Principal Curtailment Program, MSHDA gives up to $10,000. These are for people who have a severe negative equity position. That means they're upside down on their mortgage, in essence.
Okay.
They owe more than it's worth. So we'll give them up to $10,000. We ask the lender to match that dollar amount up to $10,000. So $20,000 could potentially be available to reduce their principal. And then we ask that the lender do a modification so that it lowers their payment amount, hopefully reaching a more sustainable payment for them.
Okay.
So that's kind of how the 3 programs work.
Those are excellent programs. I was not aware.
Yeah, they have been very busy setting
Sure.
these things up. A big part of it has been signing up the servicers, the banks, the lenders that work in Michigan. We've been working really hard on getting them all signed up so they can offer these programs to their customers.
Okay. How are these, I need to ask, how are these promoted?
They're promoted by certainly, first of all, signing up the lenders.
Okay.
We really, when we do a lot of things, we can put the programs together many times, but we ask our participating lenders and our partners to get the word out to their customers.
Okay.
We have certainly do our best to promote things through, the media that's out there, but we really kind of rely on our partners and lenders to get that word out.
Okay. Wonderful. Donna, let's kind of focus over to you. Is it possible for a person to refinance if they owe more than what their home is value?
Yes, it is. On the conventional loan products, which would be a Fannie Mae agency product, they have a DU Refi Plus is what it's called. And you can finance up to 125% of your home's value. You have to have, if you have a second on it, you have to subordinate that second. And the first cannot exceed 95% of the value, with the total 2 combined not exceeding 125.
Okay.
For the FHA programs, they should contact their current servicer because that's who they would work with on those particular products.
Okay. Do you find yourself in this scenario, in the situations? Do you
Oh, there's
see a lot
lots
of
of
this?
people. There is a lot of people that call and request, and not everyone is going to qualify for it,
Okay.
but they do have to call a lender and they could discuss it and then see what the lender is able to do for them to help them out.
Okay. As far as the tax credit, did you want to mention that?
Yeah, we do have a program out right now. Federal tax credits were widely used by the federal government to stimulate home buying. And the $7,500 tax credit that was out, it's gone away last year, but that was extremely popular and really motivated people to get out and buy homes. MSHDA does have a federal tax credit that's out there that's called the MCC program.
Okay.
With this federal tax credit, we can give people up to 20% of their mortgage interest back that they pay every year back as a federal tax credit against their year-end tax liability. So when you look at our federal tax credit program that we have out there, it can have a huge benefit for people who are buying a home.
Sure.
So if they are buying, a $100,000 home, and their interest that they pay every year is, say, $10,000 a year, this federal tax credit will give them up to $2,000 every year. Okay,
Wow.
this goes year after year
And then
after year.
So
also,
it's every
on
Yeah.
that, you can actually qualify a borrower with that credit, so it actually lowers, they can qualify for more of a house with that
Oh,
credit.
wow. Okay.
Yeah. So the program is very successful. There's a lot of benefit for
Sure.
buyers with this program. I want to point out too that with our programs, not all of the buyers have to be first-time home buyers. Some of them can be repeat buyers in our targeted areas, which
Okay.
again, we rely on our lenders to kind of go over that with borrowers once they contact them.
Okay. And Wes, what's your perspective is when you have buyers, or, coming to you for your expertise and
Yeah, well, we still get a lot of calls about the federal tax credit.
you still do, yeah.
Yeah, we get a lot
Sure.
of calls. Is it still available? Is there anything else like it? So
Sure.
yeah, those are always going to be a big hit, and not again, not many people know about this as they did the Obama tax credit, the main
Okay.
or the main federal tax credit.
So that's separate than. That's separate than.
That's totally
these-
separate, yeah. And there's
Okay.
some subtle differences in how these things work.
Okay.
And certainly we're not tax professionals, but
Right.
Ours works. It does give you 20% of your mortgage interest back year after year.
Wow.
Yeah,
Okay.
yeah.
These are excellent programs that need to have more awareness, I think. At least on my end. I don't know. I'm not in that business. I'm not in the real estate business, but they seem so beneficial. It'd be silly for people not to take advantage, or ask, or be educated about
Right.
it.
Sure.
What's your take on the short sale process? I mean, do you see it? You always hear that it takes forever on short
Yeah,
sale.
yeah. Well, there's some short sales that can get approved in as little as 10 days. We've seen that.
Wow.
We've also seen some take months, 6, 7,
Right.
8 months.
Those
So
are the stories I hear.
there's a wide variety. There's a wide variety of how long it takes.
Okay.
A lot of it depends on the process of that specific bank who's doing the short sale. A lot of it depends if there's more than one mortgage company. Because if a buyer could have a first mortgage, a second mortgage,
Oh.
there could also be a PMI company involved. In a situation like that, you would have to get short sale approval from all three.
Okay.
And so that could drag out the process a lot longer.
Okay.
So it's really all over the map on how long the process takes. But from a seller standpoint, there's a lot of advantages. If there's no modification available to them and they can't stay in the home and they really need to sell,
Yeah.
there's advantages of the short sale over foreclosure.
Okay.
And one of the big
Sure.
advantages is that they could get the mortgage companies, the lien holders, to release any deficiency, so they're not going to come after them at a later time for the losses.
Okay. Okay. Well, kind of switching over to talk a little bit about the mortgage end of it. Is it possible then, if someone does it, has to short sale their home to get another mortgage? I mean,
Conventionally, you do have to wait 2 years after, and that would be the Fannie Mae agency guidelines. You do have to wait 2 years after the sale, and you have to have 20% down on a new home. After 4 years, you only have to have 10%, and then up to after 7 years, it goes back to whatever program they are trying to obtain.
okay.
On the FHA, they will not allow you to do a short sale unless, especially if you're doing it to take advantage of current market conditions,
Okay.
and get the same property or something even superior in the same location. If you were relocating, they would allow that, and there wouldn't be a problem. But otherwise, if you do a short sale, they're going to look at it like a foreclosure, and you
Sure.
would have to wait 3 years after foreclosure,
Okay.
which is really not a whole long time anyway, 3 years
Right.
when you foreclose. So
Okay.
there is always hope.
Okay. Yeah, that's good to know. Erica, is there any type of example that you could give? Is something that you've seen, one of the positive aspects of the?
Well, I think one of the main things that when we hear a lot about the foreclosures that are out there and the issues that people are having with their homes, selling their homes and struggling, is to keep in mind that Michigan has the counseling network throughout the state.
Okay.
Our homeownership counselors, they're doing great work right now with foreclosure prevention. They're really industry experts at looking at and knowing what is available to people in their area. They work with the banks all the time so
Sure.
that they know what to do and when to do it. So one of the things in situations like that is, and it's free, MSHDA pays for that, it's free to the consumer. They can walk in if they're having issues with their mortgage payments,
Okay.
and they can get free counseling help.
Okay. And how would they reach you? Or
Right.
reach the offices?
Our counselors, again, we have them on our MSHDA website.
Okay.
We have a whole counselor section, and it's broken down by county. You just select what county you're in, and
Okay.
up pops up some counseling agencies that are approved by us and offer programs that we'll pay for.
Okay. And you have various offices in the different counties, so
Oh, yeah, we have
in-
counseling agencies throughout the state.
throughout the state. Okay.
Right.
Okay. Is there anything else that you would like to add before we wrap up? Anything else about the?
Well, one thing I think that's been fairly prevalent out there and we've heard a lot about are the loan modification scams. And I think that is something that we continually hear about, and it seems like these predators kind of pop up whenever things kind of turn for the worse. And one of the things to be aware of, there have been some new rulings through I think the FTC where, you're not supposed to pay money in advance of receiving services. So for the loan modification scams, and we've probably all heard things on the radio or TV or about that, if they're asking for money up front, it's usually a scam.
Yeah, I think that's
Yeah.
the first first sign.
First sign. Have you had?
I know of companies who have done that. I've had clients call me asking me if that was the
Asking.
normal practice, and that is not allowed anymore.
Okay. That's too bad. That's too bad to hear that, but it's not. Yeah, it's not uncommon, I don't think, in
Right.
the day and age you do hear about that stuff.
Usually when things turn for the worse, there's always people out there looking to profit by,
Right.
by taking advantage of others.
Right. Okay. Did you want to add something?
And you guys have a link on your website
Right.
regarding that, correct?
Yeah, we do.
Which I think is important
Yeah.
if someone is considering
Right.
modification.
In our counseling section, we do have some information on loan scams, and the web address that is linked from our website is preventloanscams.org.
Okay.
That's all one word.
Wonderful.
With no spaces. Preventloanscams.org.
Okay.
Yeah.
Wonderful. Well, I want to thank you, all three of you, for taking the time and coming to talk with us today.
Thank you.
I really appreciate it. It's very, very important information that we talked about today. And I know every time we do these shows, I learn a little bit more. And today was, today was a good one, a very good show. So thank you all for coming on.
Thank you.
Thank you.
And again, I would like to thank all three of my guests today, MSHDA, Visible Homes, and American Mortgage, for joining me on Access Ann Arbor. Another wonderful program, and as always, very, very important information. Again, I'm Melissa Cohn. Thanks for watching.